Indian equity markets fell yet again for the third time this week, and this is in line with a lot of the Asian peers. The Nifty 50 fell close to 150 points today, taking the fall for the week so far to over 400 points. Now, the Asian markets have declined in line with what happened overnight, with the Fed making more of a hawkish statement than was expected. They have indicated that there could well be another rate hike this year, and it was widely expected that the Fed was done and dusted with its rate hikes. Now, speaking about the broader markets in India in the session today, they underperformed the benchmark index, and you saw the mid-cap index lose about 0.9%, and you had the small-cap index that was down about over 1% in trade. Now, most of the sectoral indices ended in the red, and you had the Nifty Bank that was the worst performer, down about 1.7% for the day, and you had the PSU banking pack that underperformed even more. In fact, it ended lower by over 2%. The top gainers on the Nifty 50 were Adani Ports, Tech Mahindra, Dr. Reddy's Laboratories, Asian Paints and Bharti Airtel. And among the top losers, you had Mahindra & Mahindra, ICICI Bank, Cipla, SBI and IndusInd Bank. You saw a couple of banking names there. Mahindra & Mahindra, the worst performer on the benchmark, lost over 3% after the announcement of a voluntary wind-up of one of its Canadian associate companies. It's not really related to the tensions between Canada and India. EMS listed at a premium of over 30% and was arguably the stock of the day today. SJVN, on the other hand, dropped over 10% after the announcement of an OFS, or offer for sale. All told, where losing ground did gain very sharply in the recent past, and one could argue that some of this is profit taking.